So you're pitching a VC, and the VC asks you, what are the terms of the deal? If you want to find out the answer, stick with me right now.
Ask Alex. Ask Alex. Because you don't know what you don't know. And if you don't know, now you know.
Yeah.
So what do they mean? The terms of a deal start with whether you're doing a convertible note or a priced round. A convertible note is a debt instrument that typically converts into equity when you raise again, which is called a qualified financing round. The key terms are the discount and the cap and perhaps the interest rate, but that's not as important. And it'll typically be set at the statutory minimum. So just ask what your lawyer is that if you're not really sure. A price round is where you agree to a lot more terms and in great detail, and the price is fundamentally known of what the deal is. Whereas the convertible note, you don't really know what that price is. The key terms are the pre and post-money valuation. So the amount you're raising, since pre plus investment equals your post-money valuation, and various control and economic terms, such as if there's a board seat, information rights, liquidation preferences, anti-dilution, etc., etc. The investor is trying to get information out of you as usual. Now, unless you're in advanced discussions and have received multiple term sheets, it's probably best not to get into too many specifics, particularly if you don't understand the term sheets very well. Now, if you've been asked this question specifically, you're going to have to actually respond with something. And I don't know is not really a good response, typically ever. If you respond with something like market, then you're inviting a follow-up question of, can you be more specific, please? Potentially, but maybe they might know that market is code for, we'll see where we get to. I would treat this with a high-level response while still being slightly vague and deferring to the investor to offer their terms. It's very normal for you to say in your actual pitch deck, which is almost the second last slide always, seed stage, price round, raising $10 million. Or if you're doing convertible note, angel round, convertible note, structures are safe, raising $1 million. Now, I don't recommend saying anything more than that. You're naive if you think you will be able to set all the terms, so why bother? Get the investor to offer a term sheet and then negotiate what you can. There's this old VC joke which goes as this: you can set the valuation if I can pick the terms. You can fill in the math of what that means. So what do you need to say? Look, high level, we're doing a priced seed round. We need $3 million according to our plan. Now, terms, of course, matter to us, arguably more than the valuation. We appreciate that you as an investor will want to have certain terms to protect you as a minority shareholder, and we can completely understand that. We're not going to accept things which are not market, such as full ratchets. We're expecting pretty standard terms. I'd like to know, how you are typically structuring your deals. There you go. That's the end of that. If you want to learn more, head over to alexanderjarvis.com, and there's a load of free content for you guys to learn more and not suck when you are fundraising. Bye.